Hey guys, my name's Max. Thanks for being here. Have a new one for you today, a new fund to review. Welcome back to Cover Caller. So this is where I uncover the best ways to boost your portfolio's cash flow, right? I appreciate you guys for being here. Now, today I'm looking at STRF. That's Sam, Tom, Ralph, Frank would be the symbol. The name is Strategies 10% Series A Perpetual Strife Preferred Stock. I'm going to cover assets raised, inception date, total return, strategy, dividends, all that kind of stuff. So stick around. All right, let me try to clear up the confusion. STRF, once again, the name is, the strategy is 10% Series A Perpetual Strife Preferred Stock. It trades on the NASDAQ. Now, it's not a corporate bond. That's what some people thought. So, which would have a fixed maturity, nor an ETF, kind of like yieldmax. This is a preferred stock. Preferred stocks kind of sit between corporate bonds and common equity. These offer fixed dividends, and most importantly, priority and liquidation. What does priority and liquidation mean? Priority and liquidation means if MicroStrategy should go broke, it should go to a bankruptcy court, the holders of preferred stocks get paid before the holders of common equity. You get that's why it's preferred. You have a preferred place in line as a creditor. All right, the issuer of this was MicroStrategies, MTSR. They issued STRF to raise cash for Bitcoin purchases. All right. Preferred stocks don't have AUM. They have market cap. This is a $700 million. They have basically, just think of this as a $700 million pool of money that Michael Saylor can buy Bitcoin with. Post on X are calling this a Bitcoin-backed bond. It's actually preferred stock. All right, so you can see what I really like. Obviously, I like that in early April it was actually way outperforming and way safer than MicroStrategies, which was down nearly 30%. It looks like this was down maybe 5 or 6% of the worst, and we would expect that. I would expect that anyway. Of course, since inception, it's trailing the parent. Once again, we would expect that. But since inception, it is up 4.3%. Has not paid a dividend yet. We're going to get into the dividend schedule and that kind of stuff here in a second. I already showed you where they were. It was outperforming in April. That's impressive. The 10% annual dividend paid quarterly drives most of the returns, or I'm going to say all of the returns. STRF's price is more stable than MicroStrategies, but has limited upside. Perfect for income over growth. And I would say most any income investment has limited upside compared to the parent asset. STRF is managed by Strategy, led by Bitcoin advocate Michael Saylor. The board of directors declares the dividends, and there's no separate fund managers like ETF. This is an internal company project, I guess. The buck stops at Michael Saylor's desk. So Strategy, their software business generates about 100 to 150 million in annual cash flow supporting dividends, while it has 506,000 Bitcoins. That's its core asset. That's amazing. It has 506,000 of something that's worth 100,000 a piece. Wow. All right. When do I get paid? The next question is, when are dividends paid? I mentioned they pay a 10% annual dividend. It's declared if declared by the board or when declared by the board, but they're planning on paying $10 per share, which is $2.50 a quarter. Here's the dates. March 31st, June 30th, September 30th, and December 31st. And their first payment's going to come on June 30th. And it does say if declared by Strategy's board. I would presumably it's gonna come on June 30th. That's the plan. So the first payment covers the first quarter because this thing was issued in late March. So you have all of April, all of May, and all of June, and then they're going to pay you that 2.5% dividend. It does say here also dividends are cumulative with unpaid amounts compounding at 11% up to 18%. I don't get why a dividend would be unpaid. I've never invested in this type of investment before. I've never had any preferred stocks that I can think of. Probably indirectly I have, but not consciously. This goes to show you there are many different ways to make the passive income in the stock market. Income is income. Money is fungible. Doesn't matter where it comes from. It's that money's money. Cash is cash. I said. You can use dividend paying stocks, and that's a great one. Look at Warren Buffett, Coca-Cola, AT&T, those types of things. Great. Philip Morris. It's called something else nowadays, but you guys get me. You could use bonds. We have people in my Discord that construct their own bond ladders, and a bond ladder is just where you have different maturities to have a better average performance. But anyway, it's somewhat sophisticated, and you can do that yourself, or you can also have a broker do it for you, or a money manager, or a planner. You could sell options yourself. That's kind of what I like, but that's not the only way to do it. It's one of the things you could do. You could write a put spread every week in the SPY, and over time, that's showing that it has a little bit of an edge, and the money that you make over time you could spend. That's another option. You could use closed-end funds. The big one that everyone likes, I'm drawing a blank on the name, but you guys know what it is. But yeah, closed-end funds can work. You could use master limited partnerships. A lot of those deal with pipelines and stuff like that, and infrastructure related to oil and gas down here in Texas. And I've never had any of those either, but I know people that have had really good luck with those. And of course, you could use yieldmax or roundhill if you don't like to sell options yourself, don't know how to. That's another option. You could also use an insurance product. Now, the insurance product, like an annuity, is guaranteed to decay. It's not good. Your heirs aren't going to get anything, but it's also guaranteed to last for your whole life. You can trade an amount of stock, and they will give you a guaranteed income for life. You could also use the fund XPay. XPay, I think, is from Roundhill, is somewhat similar to an annuity in so far as the decay and erosion's guaranteed. So here's my idea. How about a combo of several of these? I mean, you don't have to just do one or two. Some of these strategies and some of these products do better in certain situations. Others do better in other situations. Some are more tax sensitive. Some are better for tax-free environments. Speaking of taxes, you could also use a triple exempt, meaning it's exempt from state, local, and federal taxes. And they have ETFs that are composed of those. You can go buy your own single bonds, municipal bonds. My grandfather used to love municipal bonds. The world's your oyster as an income investor. Now go get it.